Data centers in space. No, that isn't the plot of a new sci-fi movie. It is an actual ambition being discussed by some of the biggest tech companies on Earth. From SpaceX to Alphabet, there is talk of shrugging off earthly constraints to power the massive computing needs of artificial intelligence. To you and me, that might sound ambitious, but to Jim Chanos, one of Wall Street's most legendary financial detectives, it makes him giggle. Chanos calls this the data centers in space phase of the market cycle. It's that moment when optimism turns into euphoria and reality starts to blur with fantasy. But here is the multi-trillion-dollar question. Is this just the future arriving fast, or is it a massive bubble waiting to pop? Today, we are looking at the market through the eyes of the smart money that usually bets against you. We're analyzing insights from three of America's most prominent short sellers, the financial sleuths who make their living hunting for fraud and overhyped stocks. Their warnings are flashing red, and you're going to want to hear what they're betting on. First, let's set the stage. In a market that usually cheers for stocks to go up, these guys are the villains, or perhaps the necessary anti-heroes. They are short sellers. They make money when companies fail, crash, or get exposed for lying. We're talking about Jim Chanos, the man who famously predicted the downfall of Enron, the massive energy fraud back in 2001. We have Carson Block, who rose to fame exposing the forestry firm Sino-Forest as a fraud, and Andrew Left, known for taking on high-flying drug makers like Valiant. Right now, conventional valuation metrics, the boring stuff like earnings and sales, show that American stocks are nearly as expensive as they were during the peak of the dot-com bubble. In some cases, they are even more expensive. You would think these short sellers are licking their chops, ready for a bonanza. But surprisingly, their views aren't as simple as everything is going to zero. Let's break down their different takes, because they span the entire spectrum of fear and greed. Jim Chanos is the most worried. He sees an exuberance that feels exactly like 1999 or 2021. He points out that retail traders, people like you and me, are more exposed to the stock market now than they were even in the dot-com era. When everyone is all in, Chanos gets nervous. But then you have Carson Block. He's a bit more sanguine, a bit more calm. He argues, I don't think there's this big bubble here. Why? Because unlike the dot-com era where companies had no profits, the big AI giants today have solid earnings growth. They are actually making money. And Andrew Left? He thinks the market is just too thick, and the technology is too exciting for an immediate crash. However, he warns that a deflation could happen when the cycle eventually turns. So, we have a legend predicting a repeat of the year 2000, and others saying, not so fast. But they all agree on one terrifying thing. You never know you're in a bubble until it pops. So, if a crash is coming, how do we spot it? Andrew Left says you can't predict the come-to-Jesus moment. You usually miss the first 15 to 20% of the drop before you realize what's happening. Jim Chanos offers a haunting comparison to March of 2000. He recalls that the internet bubble didn't burst because of bad news. Sales were still going up. The market just stopped rising. Every buyer who wanted in was already in. And when the buying stopped, the fear began. For Carson Block, the canary in the coal mine isn't the stock price. It's unemployment. He believes this bull market is being propped up by retirement savings flowing blindly into index funds every month. If unemployment spikes, that money flow stops, and the support for these high stock prices vanishes. For Andrew Left, the signal will be when companies start cutting spending, admitting that, hey, we experimented with AI, and it actually wasn't that transformational. There is a massive bill coming due. Big tech is set to invest $5 trillion in AI between now and 2030. To make that worth it, they need to generate an additional $600 billion a year in revenue. Who pays for that? Is it businesses? Is it consumers? If the AI promises don't pay off, the losses won't just hit billionaires. This is the scariest part. American households have more to lose now than ever before. Stock ownership accounts for over 30% of total household assets. That's the highest since the Fed started collecting data in 1945. Jim Chanos points to data from Robinhood, noting that many retail accounts have concentrated their bets on the riskiest assets. If the market wobbles, regular families are way out there on the risk spectrum. Here is the final twist. Usually, short sellers are the watchdogs who sniff out fraud during these boom times. Chanos says, the fraud cycle follows the financial cycle. But the watchdogs are being hunted. The Department of Justice has been investigating short sellers, serving subpoenas and pressing charges. Chanos has closed his fund to outside investors. Block and Left have faced intense legal heat. When the optimism fades, and it always does, we might find that there were fewer detectives on the beat to warn us about the scams hiding in plain sight. So, are we heading for space or a crash landing? The smart money is divided, but they're all keeping one hand near the exit door. What do you think? Is AI the real deal or the next dot-com bubble? Let me know in the comments below. Don't forget to like and subscribe for more deep dives into the business world. Thanks for watching, and stay connected for more insights.